Real Estate and Mortgage Show, your go-to spot for everything home buying, selling, and financing on News Talk 580 CFRA.
Welcome to the show, everybody. Happy New Year.
Happy New Year.
2026. Good riddance to 25.
I agree, but it's like, you know what? I'm missing, I must admit, I'm missing the kind of quiet of the Christmas to New Year period where it was just so mellow and quiet. And now we're like, as of Monday, we're back into the grind of things, right? As of Monday. So
I got a pile of shoots booked already Monday, Tuesday, Wednesday. So
amazing.
That spring market's coming around. Amazing.
Well,
as you always say.
We as a company have lofty goals this year. Like our goals are huge. And you know, we had an amazing 2025, but it's not where I wanted it to be. And so now there's a lot of pressure to get to where we want to be. And we want to help a lot of homeowners this year to get where they want to be. Our goal is 750 deals this year. So
I've been on pins and needles because for the last two shows, all you've done is bragged about. I can't wait for the prediction show. Your amazing prediction there. What did you call yourself? Maestro, I believe.
The Maestro.
Maestro.
Well, you know what, Frank?
Well, listen. I'm on pins and needles because we might be in different directions. We might not. Just so everybody knows, we don't discuss what we think is going to happen so that we can have a nice, either we can agree, which we might, or we can disagree, but at least it's going to be nice and live and it's not prepared. It's not anything. We just...
So I've written.
All right, who's going first?
I'll go first.
Yeah,
So I've written some notes too about what I'm predicting this year. So listen, let's start with the number of sales. I think the number of sales will be up again this year. You know, when the numbers come out, we'll figure out where we were in 2025. But
we don't have them, right?
We don't have the numbers yet. I looked this morning. We don't have them. But, you know, I predict we're going to be anywhere from 1.5 to 2% number of sales up. This year, I think we're going to be a little higher. I think we're going to be 2.5 to 3% number of sales up. I think there'll be more sales.
Why, Paul?
I just think there's more buyers coming out of the woodwork. I think, you know, once this first-time home buyer GST rebate hits, I think we're going to get more people, more first-time home buyers. So I think our sales are going to be up. You know, I think inventory might be up again. There's a lot of people that took their house off the market at the end of 2025 that will be putting their house back up on the market 2026. So I think the inventory will be a little bit higher. There'll be more people in the market. There'll be more buyers in the market. So I think it's going to be a little bit of a stronger market. And then when we look at the average sale price, there's a lot of economists that are saying 1%, 2%. I'm potentially, this is where Frank and I might disagree, I potentially think our average sale price might be up about 2.5 to 3%, to be honest with you. I think that's where we're going to be. And, you know, there's going to be different segments of the market. I do believe that the sort of the 0 to 600 grand, I think is going to teeter towards a seller's market this year because that's where the townhouses are. That's where the small singles are. You know, we got the first-time home buyer GST credit,
right?
The affordable product. We got buyers coming out of the woodwork. I do believe that market is going to be leaned towards a bit of more of a seller's market. When you get to 60,
well, like we talked about though previously, like in the recap, that you were saying like the condo market in 2025 really held back the rest, and that exact market you were talking about, that 500 to 600 townhouse market, really
spurred it. I mean, last year when the numbers come out, but the townhouse market was only 3.1 months of inventory in the market, which is what really helped us because the condo market was ugly at 7.3, and we'll see if the numbers change when it comes out. But I think the 6 to 8 segment, I think is going to lean closer to a balanced market. Then when we get up to the $1 million plus, I think we're going to be in a buyer's market. And I think when we get to the 1.5 plus, I think we're going to be a super strong buyer's market. And I'll tell you why. Affordability. People can't afford what they can afford, what they used to afford. So, you know, 0 to 6 is going to be a great seller's market. And then we're going to teeter to the balance, and we're going to go into a stronger as we go further on into the price range. When we look at the hot areas, and I jotted down my areas of what I think we're going to be hot next year. And when we look at urban, we're going to look at like Westboro, Hintonburg, Wellington West, the Glebe, Ottawa South, you know, Centertown.
The usual suspects.
The usual. But when you go to suburban, Barhaven, Stittsville, Canada South, and Orleans, I think are going to be quite hot. And then, of course, in rural, I think Manotick and Greeley are going to be hot. But the one thing, and I mentioned it last week on the show, the one thing I'm going to tell you is we are going to be in a market like we've never been before when it comes to pricing properties and when it comes to getting your houses ready. This is not going to be a market for just trying stuff, and this is not going to be a market for slapping, you know, lipstick on a pig, excuse the expression. But, you know, you have to do your renovations. Your home has to show well, and your home, 100% has to be priced well. The beauty of that is what's going to happen is you have to list with the strongest realtors. You have to.
Right.
You have to, because we're the strongest at pricing. We're the strongest at telling you what you need to do, and we're the strongest at our marketing plans and getting your home sold. And 2026 is going to be like a no year like we've seen before when it comes to that type of stuff.
You have to approach that level of perfection on the property at every aspect of it.
This is not going to be a year where it's like, I'm just going to find the cheapest agent and I'm just going to go with the cheapest agent because it's all the same. And I'm going to listen to what they say in price. No, I'm not. I'm going to tell them what I think is the price, and that is not going to happen in 2026. 2026, you need the most experienced agents, you need the strongest agents, and especially you need someone who's going to show you the forensic evidence and tell you what your home is really worth and tell you what you need to know and not what you want to hear. I have way more predictions for 2026, but I'm also anxious to hear what Frank thinks about the mortgage market in 2026.
Well, I guess everybody's biggest question, as always, is rate cuts.
Yeah, and that's, but you know, as much as Paul's numbers are, I think we might be very close to the same page on the numbers. But those numbers,
what? I'm right?
I didn't say you're right. I said we're on the same page.
That's right. That means right. I think that means right.
Page. But
guys,
it's all
this
going
is
to be
the first show of the year.
Remember, 125 is the over/under on how many times Paul's going to say, "Frank, you're right."
Oh, that's right. I forgot
you,
about
Frank.
the over/under.
So he's up 1-0. But I do believe that what happens with interest rates is going to be instrumental in what happens with the real estate market, because for the last couple of years, first-time home buyers have been kind of on the sidelines, most of them. And we need Bank of Canada to lower interest rates 1 or 2 more times, and we need bond markets to come down so that fixed rates can come down. So, in 2025, we saw that the variable rate, the prime rate, came down by 1 full percentage point and two cuts in the first half of the year and 2 cuts in the second half of the year. We're hoping. It all depends on what the employment numbers are, because I think that inflation's under control. I feel like inflation's under control. I feel like GDP is probably going to be weak. They're expecting it to be weak. It likely will be weak. And at the same time, if employment numbers are weak, and what I mean by that, if continual full-time jobs are lost, we might see some part-time jobs being created. But if full-time jobs are turning into part-time jobs, that's not a good thing. So that could impact what happens with interest rates, specifically south of the border. And I think the one thing that I want to talk about is President Trump and his anxiousness to get rid of Jeremy Powell, who's done an excellent job as the Fed chair, and replace him with one of his people who probably is not qualified to do the job. But
he'll tell him what he wants to do, and they'll do it.
Well, that's exactly what he's talked about, is the fact that I want them to come to me before they make the announcement, and I want to help them decide what the announcement's going to be, i.e., I'm saying what the announcement's going to be. So he is gung-ho on interest rates coming down tremendously. He talks about he wants interest rates to be at 1%. So that's a significant drop. And if that were to happen south of the border, the likelihood is very high that will happen here as well. And we'll follow
It has
suit.
to follow, right?
We'll follow suit likely. So, again, those are things that are kind of in the works that will determine what happens with interest rates. So I do believe that interest rates will come down throughout 2026, despite the fact that in the U.S. inflation may be a problem in 2026 because the tariffs are going to start to come around, or he's going to have to pull back on the tariffs to get the pricing back in order and then lower interest rates. So somebody with knowledge may have to tell him, you want interest rates to come down, you need to temper inflation. And the only way to temper inflation, get rid of your tariffs.
So, Frank, you use the words, I think, and hopefully.
Yes.
Whereas I'm like, I know this is going to happen. So how much are we coming down next year with interest rate? Like, where's prime going? Where's the fix going?
So Bank of Canada, their neutral is 2 to 2.25%. We're starting the year at 2.25%. Realistically, they could come down to 1.5, 1.75 on their rate if the unemployment rate goes up like it might. If that were to happen, then I think he's got room to do that. But I don't think he should be the only one that helps here in the real estate market and for first-time home buyers, specifically for Canadians. I think there's an argument to be made on 2 things. Number one, the stress test. I think the stress test needs to be relooked at. Adding 2 percentage points to the contract rate that a client is getting, I think, is too high. That number needs to be adjusted. It might be 1%. It might be 0.75%. We don't know, but 2% is the wrong number.
When they brought it in,
yes,
when rates were at 1.6.
Correct.
Yeah.
Well, they brought it in before that, but it certainly helped during 2020, 2021 when we had historically low rates. But now that the rates over the last 2 or 3 years have been high, we've argued for the longest time that it doesn't make any sense, and it's actually holding back first-time home buyers from buying homes, number one. Number two, I really think the amortization period needs to be relooked at again. I don't think there's anything wrong with going from a 30 to a 35-year amortization, and I think that everybody should qualify for it. If reverse mortgages are a thing where they have no amortization for older people, then why are we limiting younger people with a tight amortization? I think you can refinance at any time to a 30-year amortization. So the fact that we're doing that just doesn't make any sense. I think having a 35-year amortization, and if you want to do it just for first-time home buyers, great. Give them that option of a 35-year amortization, because I think that would be great moving forward. And then the other thing that I would throw in there that I don't think they're going to do, I'd love to see that first-time home buyer incentive program come back that Trudeau brought in 4 or 5 years ago that never got off the ground. But I'd like to see it where they do not take any ownership. They give that 5% down payment. They match the down payment that a first-time home buyer does as an interest-free loan. They don't take any share ownership in the property. And then only when the client refinances or sells the property do they pay back that 5%. I'd love to see that.
That seemed to be the big holdup on that program.
100%.
But hold on, as a businessman, why would they do that?
Because it's going to get jobs. Because we talked about, right? When you build more homes, when first-time home buyers are out there, you're helping the economy. When you're helping the economy, you're creating jobs. And when you're doing that, then the government wins on that front. So they're just giving interest-free money and allowing the economy to grow and get jobs. So I think that's why it makes sense.
Have a question for us moving forward? Head over to realestateandmortgageshow.com and submit your question there, and we'll get to it on the air next week. We'll be right back. Welcome back to the show, everybody. Just a reminder, if you have a question, head over to realestateandmortgageshow.com, and you can ask your question there. Frank and Paul will, of course, answer it as quickly as they can, but we will read it live on air on the next episode. So let's continue on with our episodes. I'm really owning that these days.
Yeah, good for you. Good for you.
927 or 928 or something. So we're up there on episodes.
Yeah, a lot of episodes.
Yep.
Oof.
Wow.
Okay, let's go.
So much pressure.
I know.
All right. So, Paul, we talked about a little bit about some of the hot areas in town.
Yeah.
What about new construction? What are we looking at? What's your prediction for new construction this year? I know there's so much talk about getting shovels in the ground, development charges, all that kind of stuff. Where are you seeing the new construction market?
Well, Bill 60 came out, and that one of the parts of that bill which I love about was the landlord and tenant, and easier for landlords, making the playing field even. But the other thing that came out too is they're trying to make it easier for shovels in the ground, saying that how long have we heard about getting shovels in the ground is easier and this and that. I do believe it's going to be easier in 2026 to get shovels in the ground. I do believe that the construction is going to increase. The new construction is going to increase, especially with the new the GST rebate coming in. That's potentially going to be the HST rebate for first-time home buyers on new builds. So I do believe that the new build housing starts will increase next year. And they're going to be mainly in suburbia. Right. We're still seeing the downtown condo market is going to be a little bit flat, mainly because the condo market, I believe, this year is going to rebound a little bit, but it still might be the heel of our market. It still definitely will be the heel. Saying that, when you look at suburbia, I think that's where a lot of housing starts are going to happen. You're going to look at the Orleans, the Riverside South, the Findlay Creeks, the Canadas, the Barhavens. That's where all the major tract builders are, and I think that's going to be increased even more. There's lots of land out there. I do believe that builders are going to take advantage of getting shovels in the ground in those areas, in that land. I mean, you look at even an area like Barhaven, Riverside South, and Findlay Creek, like there's tons of land to develop, tons of land. The problem is builders have struggled to get shovels in the ground, and I believe it's going to be easier in 2026. Construction's going to go up. More jobs are going to be started, and I do believe that it's going to be a very good year for new home builders this year.
Well, and the talk about the rates that we were talking about in the first segment, I mean, that's got to help the builders as well.
100%. I mean, the lower the rates, the more likelihood there's going to be more potential buyers for them. And builders, most homes that are built today are meant for first-time home buyers, are meant for maybe people that are maybe going down a level. So people that have been in bigger homes and now their adult kids have finally moved out at 40 years old. and now they want to go down to
Careful.
maybe a smaller house. Yeah. But I think that there's lots of opportunities for builders if they build the right properties, which I think a lot of them are building the right properties that are affordable, high density, where they're going to get those first-time home buyers out. And if interest rates can come down a little bit more, if the government were to, maybe adapt a little bit of a 35-year amortization, get rid of the HST, bring those prices down, then all of a sudden we might have a robust year for builders, and that's exactly what we're looking for.
Well, and what people forget is not only is it great when the rates come down for home buyers and home sellers, but Frank just touched on it, builders. Like builders. I saw Charles from Clement Homes going through this when the rates were insane, and he had tons of debt because he was carrying a lot of product. So, and until he gets so many deals done, he has to carry that product himself. And then once he gets that financing, his financing was like 7, 8, 9, 10%, which is crazy for a builder who's trying to make it and try to build more homes. The rates are going to come down, which allows them to build more homes because they don't have to carry as much debt. But the biggest part of rates coming down that people forget about is businesses. How many businesses are running off lines of credit? You look at electricians and plumbers and all that stuff who have to get all this supply and all this material in order to do their job. Well, if rates come down, they have to carry less. It doesn't cost them as much to carry all this inventory and product. And I think that's going to help businesses, which will help spur the economy because they're going to hire more, which they're going to build more, they're going to do more. So I think that the rates coming down is not just for homeowners and home buyers. It's more for businesses and builders and basically anyone, lines of credit. And, like I said, there's so many businesses that I know that run off lines of credit.
For sure.
And when you're running off lines of credit and you're paying 5, 6, 7%, that's crippling. Like it's crippling. So now if you can run off, 4, 5, 6%, it's a little easier for those companies and those especially small companies. So it's going to be. I think the rates coming down is going to be a trickle effect for just about everybody going forward.
Right. Now, the other thing to look at too is, we've got potential layoffs in our city in 2026 with the federal government and the early retirement packages that they're putting out. So how many customers might be in a 2,000 square foot single home that have these cushy jobs, and all of a sudden their job's in jeopardy? I wonder how many of them are going to say, you know what, maybe we don't need this 2,000 square foot single home. Maybe we just need a townhome of 1,400 or 1,500 square feet, and we can get our mortgage down, and because I might not be making the same income. So I wonder if that's going to happen in 2026, where, again, that would impact the real estate market on a tremendous side.
For sure. I mean, back in the day, Frank, when you didn't have any gray hair, if you remember, you'd go into you'd go into like a new build site, and all the model homes were 3,000 square feet, 3,200 square
massive.
feet.
They were massive.
They're massive homes. When did you see a small single in a townhome? Like, you just didn't really. But now builders are realizing that affordability, first-time home buyers, getting people into homes, what are people looking for? Downsizing, loss of jobs, people are looking for that smaller product. So builders are getting smarter. They're building townhomes and they're building small singles. Rarely do you go to a new home build site where you see a 3,000 square foot home. Very rarely do you see that. That you see their model homes are small singles and townhomes and high density product. And that's what builders are building, which is what the need is. That is what the need is, affordability.
Supply and demand.
And demand.
And that's what the government seems to be sort of moving towards mandating is higher density building. Is that
affordable housing, high density building, getting as many, people indoors that in a smaller area. That is what they're mandating. That's what they're trying to do. They're building a lot more purpose-built rentals as well, because we do need rental housing. I mean, there's not everyone can afford a mortgage. So we need more rentals as well, because rent prices are going through the roof. I do think in 2026, the rent prices might moderate a little bit because a lot of first-time homebuyers are going to come back into the market, which will leave some of these rentals vacant. So prices will have to come down. I don't think they'll come down, but they're going to moderate. They're going to stagnate. So rental, it's going to be better for renters in 2026. And I just think that more builders now are building these purpose-built rentals as well, which is great too, because we need that product as well.
Well, so do you feel though that this is going to sort of backload the year a little bit more with the HST credit? Where I know we talked about this a few weeks ago, but it's passed the House, but it needs royal assent still. what are we looking at for that to be implemented?
Well, it needs royal assent, and they're coming back to sit in February.
Okay.
So I believe that's going to happen in February, if not right after February. That's going to happen, which is going to be great for first-time home buyers who are buying the new builds. But it's it hasn't passed. So I think what might happen is we might see a slower spring market than we're used to, but a stronger summer market than we're used to.
A stronger May, June, July, we're normally February, March, April.
Yeah. I mean, I always tell people, get your home on the market, Jan, Feb, March. And I'm not saying I don't do that because I still think it's going to be a decent market. I just think we're going to be a little bit backloaded where we're going to see the sort of the May, June, July be a little stronger than what they're used to. And maybe the Jan, Feb, March might be a little weaker than what we're used to.
So Frank, with that HST rebate, have they kind of settled on how it's getting distributed? Is it just coming off the price?
We don't know. I mean, that's the crazy part. Is you think that we get some memos already saying here's what's going to likely happen. The default insurers are waiting. The lenders are waiting.
Builders are waiting.
Everybody's waiting to find out what is going to happen moving forward from a financing standpoint. So it's disappointing because we should be better than this. At this point, here we are motivated I don't know that they're as motivated as they should be, because if they introduced it in May and it still hasn't passed, I'm not sure they're that motivated. But I think first-time homebuyers are motivated to find out what's going to happen. And lenders and default insurers and mortgage brokers like us are waiting to implement these changes, but we just don't know what they are. So all I know it's going to be good. That we agree with is the fact that it's going to open up some doors for first-time home buyers to be able to get into new homes. And again, it creates jobs. That's the most important part. So it's going to be good.
The downstream effects of building, like we talked about previous, a couple of shows ago.
Well, it's got a trickle-down effect. Like I said, I think more people are going to buy now, which alleviates a little bit of the rental demand because the rental market went crazy. It's going to add jobs. It's going to, it's going to be a really, really good thing. There's going to be a lot of push towards the new product, and which is good though, right? Like it's really, really good because there might be more resales for sale now as people go into new products. So I think it's going to be a decent year this year for sure.
In terms of for first-time home buyers, for sure.
For sure.
All right. Have a question? Head over to realestateandmortgageshow.com. We'll be right back.